Well, for more on the U.S. economy and today's Fed announcement, I'm joined by Gordon Gray, Director of Fiscal Policy at the American Action Forum. Welcome to the show.
Thanks so much for having me.
So the Federal Reserve finally announced this timeline to wind down this $4.5 trillion balance sheet. What's your take on the pace of this winding down?
Well, so they announced that they'd let about $10 billion a month roll off of a $4.5 trillion balance sheet. So it's a fairly small adjustment on a monthly basis, but it still adds up to a lot of money. It's about $120 billion a year, or something like 20% of the U.S. Fiscal deficit. So it's telling about the size and scope of the Fed's past intervention that you can essentially wind down 20% of the deficit and still have it take years and years to actually unwind this massive balance sheet.
So how do you think that's going to be felt in the overall economy?
Well, the goal is to have it not resonate at all, or so for consumers essentially be held harmless, that it'll be unwound at a pace where the economy can accommodate the unwinding. That's the goal. It's what the Federal Reserve will be monitoring. But it was an extraordinary intervention that gave rise to this large balance sheet, so it will be an extraordinary unwinding. And so there'll be a need for the Fed to keep a close eye on it.
Now, one thing that we've seen is that inflation has been stubbornly low, and something that Yellen, even in her comments, said it's been something as a mystery as to why. Now, the Fed ideally wanted it to hit that 2% target before adjusting rates again. Why is this happening? Why are we stuck here?
A lot of the economy has been a mystery since the Federal Reserve introduced its formal target at 2% in 2012. In fact, it's never hit that target. So a lot of it remains prospective and subject to a great deal of speculation, which is why you have a Federal Reserve chairman openly saying that the inflation environment is mysterious. So I think the mystery will continue.
Now, we know that the Fed is keeping the benchmark interest rate unchanged, at least for now. What do you think could be the deciding factors whether to raise rates or not in December?
So the expectation remains that there'll be one more rate hike this year. For the moment, that's the consensus of the governors, and a couple more rate hikes next year. It's largely unchanged. That's been the monetary policy outlook. That's kind of the tone that Chairman Yellen has set, either for herself if she's reappointed or for the next chairman. Any deviation from that outlook would be driven by, I think, extraordinary surprises, possibly by whatever the implications of the unwinding are, or any other geopolitical or major economic changes.
So as you look at the overall U.S. economy, how would you characterize its health?
Fair to middling. 1.5%, 2% growth is nothing like the post-war average that the United States has experienced. We have some demography that weighs on our growth prospects, and an older working population, and we have stagnant productivity. And so it's incumbent on the Congress and the administration to do some policy changes to get at those fundamental drivers of the economy.
So in terms of some of the challenges then, what do you think could pose the biggest headwinds, and how prepared is the U.S. to address these at the moment?
So I think the biggest headwind is actually just a failure to come to grips with the policy challenges that I think a lot of us have long identified. We have, as we said before, some demographic challenges that we just should expect and know are coming. So there's a couple things you can do. You can do sound immigration policy to address that. And then on the productivity side, that's where I think the real opportunity is for public policy. And I think not grappling with those challenges and basically leaving the opportunities that those present on the table is the real headwind.
And speaking of uncertainties, we know that Fed Chair Janet Yellen's term is going to end in February. She may get nominated for a second term, perhaps not. Right. She declined to comment on that in her comments. So how might the uncertainty over who's going to be leading the Fed affect how the central bank makes its moves now?
So I think the Fed pretty well telegraphed the expectation, the outlook for monetary policy, and certainly it's going to be subject to change. It'll be data-driven, of course, but I think we have a fairly clear expectation of what the outlook is, barring any unforeseen events. That's the legacy that Chairman Yellen will leave to her second term or to the next chairman.
And so with this potential rate hike, if it does happen in December, how do you think that might change the outlook for the U.S. economy?
I don't think that would alter it significantly. In fact, I think that's been, in many ways, priced in for some time. That's been the expectation from the last meeting. I think it's been largely reinforced by this meeting. The inflation expectation has come down a little bit, but I think the consensus is still that we'll get a hike in December, and people are forward-looking and expect it.
Well, certainly the markets do. Thank you so much, Gordon Gray, Director of Fiscal Policy at American Action Forum.